Understanding Growth Investing, a guide for English learners. Hello, everyone. Today, we're going to explore an exciting aspect of the financial world, growth investing. This concept is crucial for anyone interested in the stock market, investments, or personal finance. So, let's dive in and discover what makes growth investing a popular strategy among investors. Growth investing is an investment strategy focusing on companies that exhibit signs of above-average growth. Unlike value investing, which targets undervalued stocks, growth investing looks for companies that offer strong earnings growth. Investors in this field are typically not concerned with the current price of stocks but are more interested in their future potential. These companies might not pay dividends, as they reinvest earnings back into their business for further growth. Growth stocks have unique characteristics. They often belong to technology, renewable energy, or innovative sectors. These companies show high earnings growth, reporting higher than average profits. Reinvestment. Money earned is reinvested in the company to fuel further growth. Higher risk and volatility. Higher potential rewards, but also greater risks. Future potential. Value based on potential future performance rather than current earnings. Advantages. Capital appreciation. High potential for increase in stock value. Technological advancement, often linked to cutting-edge sectors. Compounding. Potential for significant long-term gains. Risks. Market volatility. Prices can fluctuate wildly. Higher valuations. Paying more for potential rather than actual earnings. Economic sensitivity. Growth stocks can be more sensitive to economic changes. While growth investing focuses on companies with potential for future growth, value investing is about finding undervalued stocks in the market. Value investors look for stocks trading below their intrinsic value and wait for the market to recognize their true worth. On the other hand, growth investors pay for the anticipated future growth, often leading to paying higher prices for stocks. Growth investing is an exciting strategy that suits investors looking for long-term, high-reward opportunities, especially in innovative and fast-growing sectors. However, it's important to understand the risks involved and consider your individual financial goals and risk.